There's a lot of interest in electric vehicles these days, and particularly because of the high gasoline prices. So I'm going to be talking to Pavel Molchanov, who's an analyst with Raymond James and author of the recent article, If You Can Find an EV, the Economics Have Never Been Better. $100 plus oil outweighs record electricity prices. And he joins us from North Carolina. So welcome to the interview, Pavel.
Thanks for having me.
Now, I've done a couple of interviews with folks who have done levelized cost of driving analyses, that sort of thing. And you can see around 2018, 2019, the economics on a per mile or per kilometer basis were shifting in the favor of electric cars and electric trucks. Give me a brief overview of your analysis, please.
Well, what's changed, of course, from those 3-4 year ago timetable is the war. As a result of the war between Russia and Ukraine, we now have triple-digit oil prices for the first time in 8 years. The last time oil was above $100 a barrel is 2014. And I mean, let's remember, back in 2014, the last time oil was in the triple digits, there were hardly any electric vehicles available. It was a nascent market. It was still not a huge market today, but clearly much more mainstream than it used to be. And so what I decided to do is compare the economics of EV ownership today at today's oil prices and compare it to what it was a year ago. Now, if we compare it to 2 years ago, the beginning of COVID, when oil prices at one point actually turned negative, then it becomes almost meaningless. But a year ago, into the vaccination-driven recovery, oil was back to kind of $60, $70 a barrel. Not a very low price by historical standards, but again, it was before the war and $100 a barrel. So here's what's changed: the price of fuel that if you own an internal combustion engine, you pay at the pump is vastly higher than it used to be. Whereas the cost of an EV is about the same or even cheaper than it was a year ago, despite escalation in steel and some other inputs. So the payback period, meaning if you look at this as an investment, and the return on that investment is saving money on operating costs. Now, what is that? Today, it's about 5 years for a typical EV in the United States. A year ago, it was 12 years. And to be clear, this is without any subsidies. So if you buy an EV that qualifies for the federal tax credit, your payback period might be 0. But just comparing it head to head without any policy mechanisms in there, it used to be 12 years and now it's 5. That's a lot better.
Are we going to see the economics change even further, Pavel? Because it looks like inflation is going to be with us for a while, maybe a year, maybe 2, we don't really know. But inflation is going to increase the costs of other inputs into driving, like repairs and maintenance. And right. That's an area where EVs also outperform ICE vehicles. So is it fair to say then that that inflation is going to further advantage EVs?
It certainly helps. So maintenance is one of the sources of savings in EV ownership. So the big one obviously is just the energy itself. The cost of driving a mile when you pay $5 a gallon for gasoline versus driving a mile when you pay about 15 cents a kilowatt hour, which is just an average utility cost in the United States. It's about 4 to 1 in favor of EVs. But on top of that, there is maintenance cost. You're exactly right. Here's an easy one. There is no engine oil in an EV, therefore there are no oil changes. So forget about going to get your oil changed. Every few months. There's just no need for that. And yeah, look, the longer oil stays high and the longer maintenance and labor more generally stays expensive. That will certainly continue to support EV economics, despite the fact, as I noted earlier, that some of the inputs for an EV in terms of the upfront cost are more expensive than they used to be. For example, the lithium that goes into the battery.
One of the things I find interesting about this conversation, Pavel, is that having watched this space for a long time now, is the attitude, the change in attitude by consumers, because consumers, it used to be, sort of accepted wisdom, even in a year or two ago, that consumers bought cars on the basis of the sticker price on the lot. But now, because I spend a lot of time on social media watching, EV groups and various conversations, people are really beginning to understand this idea that maintenance costs are lower, fuel costs are lower, so I may pay a little bit more for an EV. And it seems like the mindset around automobile ownership and how you calculate costs and how you calculate value is changing. Would you agree with that?
There is more awareness of electric vehicles as something that actually can save you money in the long run. Now, to be clear, one of the hurdles to broader EV adoption is that they are not the cheapest cars out there. Obviously, Tesla's kind of a luxury brand. There are other fairly expensive $40,000-$50,000 EVs. One of the things the automakers can do to accelerate adoption is to push more EV models that are targeted to the bottom half of the price spectrum. So call it $20,000 to $30,000. For example, Nissan Leaf can fit into that. But a lot of EVs are certainly more expensive. That being said, we know from history that when oil prices are high, people tend to buy smaller cars or historically, hybrids. Well, now, in addition to smaller cars and hybrids, which of course are still available, there's also the opportunity to look at electric as an option. But not everybody will choose that.
Sure. That's why we talk about the S curve, the adoption S curve, when we discuss EV purchasing. Well, Pavel, thank you very much for this. Really appreciate your insights.
Thank you.